So, Your Excellencies, distinguished ladies and gentlemen, the next panel discussion will be taking a look at the cooperation and the collaboration needed, especially in the family of regulators. I'd like to welcome here now the panel discussants for the panel discussion. Let me welcome the Director General, National Pension Commission, Mr. M. Welcome here, the CEO, Capital Market Authority, Kenya, Stella Kilonzo. Norman Muller, Head Capital Market Department, Financial Services Board, South Africa. Norman Muller, thank you very much. I'd like to welcome the Governor of the Central Bank of Nigeria, Sanusi Lamido Sanusi. Let me also welcome here the Director General of SEC, Ms. Aruma Ote. Well, the moderator for this session is Senior Anchor for CNBC Africa, Lerato Mbele. Let me also welcome here the Honorable Commissioner of Insurance, Mr. Fola Daniels. And so, distinguished ladies and gentlemen, we hand over to the moderator of the program right now, Lerato Mbele. Over to you.
Hello, and the warmest welcome. We're coming to you live from Abuja, Nigeria. It's Project 50, celebrating 50 years of financial markets regulation in Nigeria. It's an event celebrating the successes, particularly over the last 3 years of reforms, the reform agenda of the government of Nigeria that's seen a new Director General from the SEC come in bullishly to introduce better governing standards, a new governor for the central bank coming in to resolve issues around a troubled banking sector. And all of these paying dividends, because definitely we've seen a lot more investment flows into Nigeria, a lot more confidence in the Nigerian market. What we're doing now is having a conversation with regulators from the 3 largest economies in Africa, a representative from South Africa, from Kenya, and of course the Nigerians, giving us their views about the dynamism of Africa as an investment destination, particularly now that we're seeing sluggish growth in Europe, as we're seeing investors holding on to their assets internationally, looking for yield. The suggestion is bring it to Africa. The economies are growing and the markets are ready to receive that financing. But of course there are issues. There have been issues of governance we know of very well in Nigeria. There are also issues of liquidity. We know of a lot of markets depending heavily on foreign investors and capital inflows from abroad. We also know of the need to diversify product offerings. Investors are clamoring for this, saying give us more variety in the market. It's the regulator's job to do this, to introduce a better system of norms and standards, to introduce better monitoring mechanisms to protect investors' funds, to ensure that we really curb excessive risk-taking when people are doing business in Africa, and then to support an agenda for innovation. Let me introduce you to our panel. From my left to my right, we have Fola Daniel. He's the Commissioner of Insurance for the National Insurance Commission here in Nigeria. We're going to be finding out what insurers are doing to come up with products that are just going to entail and support the idea of people savings, those unit trusts, those provident funds. We also have the renowned, I call him the global governor, having been recognized internationally, Nigeria's governor of the central bank, Sanusi Lamido Sanusi. He's been at the forefront, really, in the coalface of reforms in Nigeria, and he's going to tell us what they've done to really regulate and improve on standards here in Nigeria. The Director General of the Securities and Exchange Commission, Aruma Ote, she's also here. She's had her work cut out for her in sorting out a lot of infractions in Nigeria's stock exchange, and almost 2 years on, getting a synopsis of the successes, the failures, the incumbent challenges. We also have Mr. Mohammed Ahmed. He is the Director General of the National Pension Commission of Nigeria. So far, they're invested over 47% in Nigerian securities. They're really the drivers of that kind of liquidity we're talking about here. Seated next to him is Norman Muller. He's Head of Capital Markets at the Financial Services Board for South Africa. We know the JSE in South Africa regarded as probably the most illustrious, most well-capitalized bourse in Africa, but that doesn't mean South Africa's perfect in any way. And of course, Stella Kilonzo, last but certainly not least, she is also the head of Kenya's Capital Markets Authority, and she's slap bam in the middle of a very interesting process of demutualization and other reforms. So welcome to everybody. Thank you so much for being here. Let's start with you, Fola Daniel. What is NICOM doing to position insurance companies as key institutional investors? Like I said, you know, we heard earlier on Aruma Ote speaking, and also the Minister of Trade saying it is important to build a savings culture in Africa. You come in as a solution. What are you offering?
Thank you very much. The insurance industry in developed economy is very, very key to the capital market. Not just a source of steady investment income, to corporate governance. The Nigerian industry at the moment has not been able to contribute that significantly as you find. The reason is quite obvious. The insurance culture in Nigeria is not deep. Insurance industry in Nigeria has some perception that is not too robust, which is anchored on the past misbehavior of a few operators of the insurance industry. In 2007, the government decided to take a very bold move, asking for a new capital base for insurance. Capital requirement of insurance companies in Nigeria is the highest in the whole of Africa. At the time the capital base was put in place in 2007, you can say that it has no correlation really with the ongoing business. So if you like, in 2007, the capital base was futuristic. Now, the insurance industry are significant players in the capital market.
Right.
Out of 50 companies, over 30 are listed. The activities of NICOM is developmental with focus on carrying insurance to the next level, developing insurance beyond the pedestal which you have now. And we have concentrated on looking beyond things that we know of. We are concentrating on the grassroots, trying to develop TACAFO, trying to develop agricultural insurance and micro insurances, because we believe that 60% of insurable interest or 70% are really outside the elite where we concentrate right now. So we are developing agricultural insurance beyond one company, micro insurance and TACAFO, where we have a large interest.
All right, we'll elaborate on that further. Governor Sanusi, you're world-renowned, you're well-known for your bullish sentiments on Nigeria and everything that you've done to really promote this as a viable investment destination. The most recent actions being lifting those restrictions on foreign ownership of fixed income assets so that investors can bring in their money and transact easily. Is it all paying off? Are we seeing those capital flows into Nigeria?
Well, the primary responsibility of the central bank is to provide stability. We don't really provide growth, but we do provide an environment in which investors feel safe to invest. We've got to provide price stability. We've got to give investors a sense of expectations on the exchange rate, and I think this is one of the issues that we've had these debates with the IMF over. People sitting outside would like to know that they're not going to lose all their money on exchange rate fluctuations. We've also got to provide financial stability. And so for us, as a regulator and as a monetary authority, we simply focus on that. Now, we have seen a lot of progress in terms of interest in Nigeria. We do think a lot is happening in Europe at the moment, obviously, and Europe has to get its house in order before investors begin to come in. Interest rates are now positive in real terms. There are still concerns about the exchange rate in the next week or two. I think people will begin to see what the stance will be for the next 12 months. We will come out and say what the stance is.
Right.
I think people have started guessing already what it's going to be, and in the next week or two, it will be very apparent.
Maute, a lot that you've had to be responsible for. I mean, we know that spectacular crash of the Nigerian market because of infractions within the system. You've had to come up and do a wide cleanup of the system in general. Your reflections on the last 2 or so years that you've been in office?
First of all, as the Securities and Exchange Commission, we recognize the important role of the Nigerian capital market to transforming our economy. We know that we must have funds that complement the banking sector, whether it be fixed income, whether it be investment in equities and companies. So for us, we must build a capital market that is the first port of call for any investor, whether they're local or whether they're international. And the starting point in building what we consider a world-class capital market at the SEC is one where investors feel that their assets are safe. And investors will feel that their assets are safe where the regulator takes issues of market integrity very seriously. And market integrity for us means that we will have zero tolerance for anything that is improper, and we will make sure that our market does not accept any infractions, and that we will have sanctions and penalize those who commit infractions. So the first 2 years of me joining the SEC has been really focused on on addressing issues of market integrity. In addition, we've issued a revised code of corporate governance because we do believe that issues of corporate governance are extremely critical to integrity. We've worked with the Financial Reporting Council, the Central Bank, and other stakeholders to work with publicly listed companies in terms of migrating to international financial reporting standards. So in terms of market integrity, there are a number of things that we have done. And of course, where necessary, we have enhanced enforcement machineries. We have taken people to the Investment and Securities Tribunal. We have today a partnership with the police and the Attorney General's office such that civil and criminal issues go hand in hand. And that certainly shows a very clear signal that we will not accept anything that is improper.
In a word, an investor who's sitting in this audience, an investor who's watching CNBC right now, just wants to know, in a word, is it safe to invest in the Nigerian Stock Exchange?
Absolutely.
Ms. Ahmed, your turn. Pension funds, very important drivers of liquidity in any market, and also just connecting the individual to equities or bonds. What are you doing as the Pensions Commission to ensure that we just see a lot more investment coming through?
Well, 7 years ago, the Nigerian government adopted a mandatory defined contribution pension system. Largely what that means is that employees will have to save for their retirement benefits. It's mandatory, and to that extent, as regulators, we must make sure that things are done properly. Okay, thank you. It is mandatory, and to that extent, we take regulation very seriously. We are pleased to inform you that, as of today, we have close to $13 billion pension assets. In the last 3 years, the assets have been growing at about 30% per annum. Beyond that, of course, we have close to 4.9 million employees. Over 70,000 employers have joined the scheme. Incidentally, even the state government, one of the state governors is here, the chief servant, is one of our flagship, and we appreciate his support, and we also expect other states will follow suit. Being a mandatory scheme, we are very conservative in investment regulation. We are very strict because the investment risk is on the employee. And to that extent, we must make sure as regulatory agency that indeed safety is paramount. In December last year, what we did was to revise the investment regulation. The challenge had been that we've been accumulating funds and there are no investment outlets. And what we did jointly with most members of this panel and other Nigerians was to review the regulation. And we had an extensive review. As said today, pension funds can be invested in infrastructure, whether it's infrastructure bond or infrastructure fund. Private equity, for the first time, we are allowing about 5% for private equity. And of course, including supranational agencies like IFC and the rest, they can raise bonds. In fact, the limit is about 20%. Right. Largely, we're trying to do that to provide access to finance and also to encourage foreign investors to come in, so that at least there are local institutional investors that can invest and also provide that guarantee that indeed there is confidence and there are funds that will actually be available. Thank you.
Norman Muller, obviously we know the story of the JSE, the successes of the JSE. Could you just talk us through quite briefly the journey of the Johannesburg Stock Exchange so that it rises up to the status that it now has as one of the best performing exchanges the world over, both in terms of returns and in terms of governance? No, I think it does. Go ahead.
Yes, South Africa is not perfect. The only way for an exchange to become a fully interoperable federation of exchanges is to comply with best international practice. We don't have a choice. As you know, HOSCO has issued 38 principles of securities regulation. Financial Services Board South Africa will strive to comply with all those principles, and especially when new principles adopted in Canada last year, June, that deals for the first time with the responsibility of regulators, securities regulators, systemic risk. Financial stability has become very, very important. It will be a challenge for the regulators to future regulate OTC derivative instruments, fair trading agencies, and a wide range of other issues as adopted by us.
Okay.
It is also important to regularly review your legislation to make sure that you comply with all these principles. In South Africa, we follow a very close relationship with the market, with the exchange, especially with regard to new product development. To bring new products into the market and to make provision in your legislation for a wide range of products in the markets. Corporate governance, as Ruma has mentioned, is very, very important to have a reputable board of directors of your exchange, as well as reputable people in terms of your executive committee of your exchange is very, very important.
Okay. Great stuff. Stella Kilonzo, a view from Kenya. You've been very busy. We know that you're full steam ahead with demutualization of the NSE. You've been involved, for instance, in just simple things like companies that are not reporting financially on time, just suspending them. So you've been very, very strict and stringent.
Thank you very much. I'm honored to be here. Again, I wish to congratulate the anniversary. Yes, I believe the issue of systemic risk is very important. We have really, as a regulator, taken a wider mandate of not just regulating, but also developing the market. A lot in regards to demutualization was really a policy incentive by the government to increase corporate governance as well as increase the competitiveness of the country, not just the stock exchange, by obviously looking at how the systems were as well as looking at how the governance is done. So from a governance perspective, we looked at the entire industry, not just the exchange. We looked at the intermediaries all across the scope, from fund managers to all the way to even listed companies currently, and that's very key. Internally, we have built strength in terms of what is the capacity of the regulator. So moving towards risk-based supervision, I think other than South Africa, which is really at the heart of risk-based supervision, we have employed a phased approach, and that has been also very successful. We have profiled a lot of the companies, and why we believe in that is because you get data also from the companies. So the companies that we regulate are also proactively managing their risk and sharing that data with us, and we are now expending our resources on the areas of high risk.
And just as a follow-up question, in the middle of this global turmoil, there is a sense that we should be getting a lot more cooperation between the various regulators in Africa. Is there a lot being done in that regard?
I'd like to comment. Since the global crisis, we actually signed a memorandum of understanding amongst the domestic regulators in Kenya, that is the central bank, the pensions regulator, as well as our own insurance regulator and the capital markets. And recently, we have just invited the cooperatives regulator, because you know the cooperatives industry in Kenya is quite large. We've invited them on this table, and what happens are we actually share information on risk. We also share information on supervision, because we have a lot of companies now that are getting into conglomerates. We have bank assurance, we have others that are also doing capital markets. So really coordinating because of avoiding regulatory fatigue, which has been a big issue with some of the companies that we license. And so that is very critical for us. Also, what we agreed at that level was that we have to ensure there is no regulatory arbitrage, which is what happened again during the global crisis. There were products that may not have been regulated, and you were assuming another regulator was looking at it. Now we are saying we are all proactive, we are sharing that information, and within that memorandum, we've also set up a financial stability committee that is actually looking at data on using global standard methods of data collection, and that information is being shared with us. We're also building capacity of all the regulators within, and that's pretty
on this track of
they expect by the end of the third quarter of this year, of next year, that they will have an upgraded technology platform which really prepares it for this $1 trillion market capitalization mandate, several products mandate. In terms of the Securities and Exchange Commission, we believe very strongly that technology is key to transforming our markets, and we've also been embarking on a large ICT revamp. We right now are not able to have returns made to us electronically, but starting next year, we will have all returns from all of the parties that we regulate be made to us electronically.
Right.
And we think that that's clearly important, will increase efficiencies and certainly allow us to focus on the things that are more important in terms of analytics.
All right, we continue on this track. We're taking a short break. You're watching CNBC Africa. We're coming to you live from Abuja, Nigeria. It's Project 50, celebrating 50 years of capital markets regulation in Nigeria. Regulators from across the three hegemonic economies in Africa talking about cooperation in regulation, but also what is needed to bring in investor flows. We're going to be hearing from the governor of the central bank shortly after this. You can have a sip of water. 2 minutes.
Okay.
Are you okay?
I'm just fine.
It is needed by way of cooperative and collaborative regulation. That's the theme, the key to market integrity. I think for me that's the underscore, market integrity in Africa. Before the break we were talking about various efforts at cooperation. Arun Maute, she's the Director General of the SEC in Nigeria. We've heard from Stella Kilonzo in terms of the memoranda of understanding that she signed with various regulators in Africa. On your side?
I'll let our central bank governor talk about the cooperation locally in Nigeria, because he chairs the Financial Sector Regulatory Coordinating Committee. But I'd like to say that on behalf of securities regulators in Africa, under the auspices of the International Division of Securities Commission, that we have been cooperating very actively. Indeed, Stella Kilonzo had mentioned the importance of risk-based supervision, and Kenya and Uganda recently hosted training on risk-based supervision such that we can have the same level of risk-based supervision across our markets. We're all members of the Africa Middle East Regional Committee of IOSCO, and what we're doing is working together to see how we can ensure that together that we abide by the 38 principles of securities regulation. Norman Muller had made the point about the fact that market conduct regulators must pay attention to issues of systemic risk. We also believe that investor education, given the nature of our markets, is extremely important. And so recently, we did have an interaction amongst ourselves on issues around investor education, given that a number of the population in Africa still don't have access to capital market products or to the banking sector. Locally, it is extremely important to us, and as a key response to the global financial crisis, we work very closely with the other regulators, certainly to ensure that there's no regulatory arbitrage. But I do think that the central bank governor, who's the chair of our committee, can make some additional comments about that area.
Okay, here's your chance, Governor.
Thanks, Director. Well, I mean, as Arun said, we've got an institutional framework here for coordination, which wasn't very effective until about 2 years ago. Is the Financial Sector Regulation Coordinating Commission, committee which I chair, and basically it brings together SEC, the Central Bank, PENCOM, NICOM, and we do have a number of observer regulators, including the Nigerian Accounting Standard Board, the FIRS, and we basically try to shut the door in the face of regulatory arbitrage. And we do recognize that a lot of what happened in the banking system, for example, happened through the capital markets. And therefore, there's no point fixing the banks if the capital market is not fixed. And a lot of the work that's happened in SEC with the investigation of the IST, for example, was basically joint efforts, Central Bank, NDIC, and SEC, and the law enforcement agents, new regulations around margin lending and capital markets. And for us in the central bank, we do have cross-border arrangements now with the central banks. We, for instance, spearheaded setting up in the West African Monetary Zone a college of supervisors that brings together the directors of banking supervision in central banks in the WAMZ region. We're now extending that to the Francophone West African region, and I have put on the table as a proposal with African central banks that we do have an African College of Supervisors.
Right.
And it's important for us because Nigerian banks have expanded into other African countries. We now send our supervisors to places like Zambia, for example, and Ghana, and they join central bank supervisors in conducting joint supervision exercises and reports. So there has been a greater cooperation across borders among central banks and also within the Nigerian border among regulatory agencies.
I know that the history, is the past, but I'd like us to just delve a little bit into the past. And when we talk about cleaning up the Nigerian system, you use the word arbitrage. Let's talk about the role of the banks, who to a large extent are the drivers of Nigeria's capital markets, and how the banks got bitten by the loans incurred in the petroleum sector, and those being bad loans then effectively created a bit of a crisis for the banks, and so on and so forth. You need to have a system where the banks are better monitored, and you've been very active in that sense. We need to have a system where the driver of the Nigerian economy, which for the moment is the petroleum sector, increasingly the agricultural sector, that their linkages to financial flow do not create an impasse, the kind of crisis that we saw before.
Well, although I missed the last bit of the question, what was the last bit you said?
I just want to know what it is you're doing to really clean up the system, because it's almost an incestuous relationship, how money flows in Nigeria to the key sectors of the economy.
Okay, well, the cleanup has been going on for a long time, and I think if you look at what's happening with Wall Street, for example, the real issue is not so much that banks were bailed out, and people understand that some banks are too big to fail. The real issue is that in the West, a lot of the people who were responsible for the mess were not brought to book, and people did not take responsibility. What we've said in Nigeria is that we do accept that banks can be too big to fail, but we do not accept that bankers are too big to jail, and that's a major difference. What we've done is to say those who were responsible for what happened have to be held to account, and that is a major part of what has changed. The second thing that's changed, I think, is we have devised a method for making sure that the banking industry itself is responsible for bearing the bulk of the cost of the bailout. So the industry understands that going forward, if the banks take unnecessary risks, the taxpayer is not going to come and bail out the industry. The bank's profits for the next 10 years are going to be used to pay back the cost of the cleanup. But now, obviously, this is an ongoing process. It's not just the banking industry. Within the central bank itself, there were failures of regulation, there are failures of supervision. There's a question of skills gaps. There's a question of risk-based supervision. What is soft touch regulation or closed regulation, and of course things like regulatory arbitrage and greater coordination with other parties. I do think before 2009, if there had been more attention paid to signals, say, coming from NDIC and SEC, the central bank would have acted much faster. And I think this closer collaboration means a lot of the information that Aruma had, for instance, came from central bank examination reports, and we just traced the money from the banks through to the capital market, and we're able to see all the insider-related transactions and frauds.
That's on the integrity side. Governor, I'm staying with you for a second here. Let's talk about the liquidity side of issues. I know it's not your job to drive liquidity in the market, just to create the conditions. But some are saying, for any foreign investor coming to any market, anywhere, they look at a variety of variables, the extent to which the government is indebted, the stability of the currency, the diversity of products on the bourse, all of those kinds of things. Now, you've been fighting tooth and nail to keep this naira stable. I don't think you're winning.
What they call famous last words. I think you'll discover you've spoken too soon. The truth is, we did have in the last few weeks a period where all currencies went through a crisis. 15%, and the Kenyan shilling lost 25%, the Malaysian ringgit, the Chinese renminbi, the euro, every currency in the world was hit. The naira lost 3, 4, 5%, and the whole world is screaming. We did breach a band. Okay, we've never said we had a fixed rate. what we said was that we're going to have a stable rate. Okay, now if you come in at, I don't care if it's 155 or 160 or 165, frankly, it's not important. But a foreign investor who changes dollars or euro or RMB into Naira to purchase Nigerian fixed income getting 15% wants to know that in 3 months, the Naira is not going to have lost 10-15%. Okay, nobody wants to have all the gains on fixed income or on equities wiped out by exchange rate losses. So what we have tried to do in the central bank is to provide people with an anchor for expectations. So people can be able to say that their currency risk is being properly managed. And so long as we're not running reserves at an outrageous rate, we'll try to give that stability. We think at this point we might move to 155, 156 as a midpoint. We might tell people we're going to move between 153 and 158. It should be very clear. We'll come up with a stance. People know that over the next 12 months, they can expect the central bank to keep the Naira within that band, and then they can take other risks into consideration.
Mr. Ahmed, I'd like your comments on this one. To the extent that there's a lot of pressure right now, I would say, on you to help sustain this market. 47% of investments in Nigerian securities. It's a good showing, but to a large extent it really means that the successes, at least in the interim, of the Nigerian capital markets depend on your participation.
Well, this is a mandatory scheme, and to that extent we need to be extremely careful. We'll be very cautious. As a policy, we decided to remain in a regulated environment. In other words, pension assets can only be invested in the regulatory market. And that's why, for instance, even after the 2008 crisis, pension funds did not move out of the capital market.